EBRD notes a growing divergence between the emerging Europe and regions like Central Asia and Africa. What are the structural factors that are driving this two-speed recovery? Is this divergence likely to persist?
Thank you for your question. When we refer to emerging economies, we are, in a simpler language, we are talking about a startup. And anything with the startup could happen. They have their own cycles. They have their own cycle of growth and then decline and growth again. So it's not possible, and nobody could say what is happening exactly. All we know, it's positive right now that all regions you mentioned are growing. Even in mature economies with changing technologies, there's a disruption in the cycles. So it is very difficult to actually precisely say what is the cause of it. And if even you define the cause and find the cause, it doesn't mean it'll be relevant in 6 months' time because everything could change. But the good news is the growth is over 3%. Having said that, for startup or for emerging economies, that is low. It should be around 6 to 8%.
Mm-hmm. Well, considering all these variables and given the warnings about tariffs, debt and conflict, how credible then is the 2026 growth outlook? Which of these three factors poses the most significant risk?
Well, let's go on. If you mention tariffs, we are talking about re-globalization, and that is what President Trump is doing. He's addressing the excesses of globalization that started in 91, 92, that we learned that globalization meant for over 25 years, all the jobs going to China. In 2017, President Trump stopped that, and it became globalization 2.0, which meant jobs going everywhere. And in 2025 is globalization 3.0, means jobs going back to US. So we are seeing that changes, which is very good news for all the economies. It means that all the economies should have a balanced economy, and manufacturing should be at core of them. And this is something we've experienced in the last 30 years, that you cannot let go of manufacturing and say we'll have manufacturing by one country and services by other country. That does not work. Every region, every country has to have its own internal full economy. Otherwise, it cannot survive.
Mm-hmm. With the inflation in these regions still high at 6.4%, how constrained are the central banks in supporting growth without exacerbating price pressures?
Well, the inflation for emerging economies, or I again refer to them as a startup, 6% is fine. Similarly, when we talk about growth of 6 to 8%, this idea of 2% inflation target, that's for mature economies, mostly G7 and maybe G10 or G12. But having said that, this target of 2% has caused so much damage and has stopped growth in G7 by just trying to achieve that 2% inflation target, that many times the central banks have had to crash the economies just to achieve that 2% arbitrary figure that nobody knows where it's come from. The figure should be, the inflation figure actually should be more variable. Previous to 1998, it was between 1 to 4%, and the economies were doing well in G7 or G10. But since that has come, it's become a universal target for all economies, doesn't work. So going back to your question, I'm not worried about that 6.4% inflation rate at the moment for these emerging economies.
Mm-hmm. The report highlights potential stagflation in Russia and continued contraction in Ukraine, obviously due to the conflict. How contained are these economic crises, and what is the spillover risk to neighboring economies in Eastern Europe and Central Asia?
They are very worrying. They cannot be contained. Russia is a big supplier of energy. and Ukraine is a big supplier of food to the world. So eliminating those from the world economy would damage the world economy massively, and we've seen that. The amount of money that was spent in United Kingdom in 2008 to recover from the financial crash was 147 billion. The amount of money that in 2022 was given in order to compensate for high energy prices to the households in UK was almost the same amount. So what I'm trying to say, this war in Ukraine is having a bigger impact than the financial crash of 2008.
Yes, well, looking at it globally now, the global debt has surged by over $21 trillion in just 6 months. At what point does this level of debt become unsustainable? What would be the tipping point look like for the global economy?
Sometimes some figures become so big that they become irrelevant. You only have to manage them. And trying to address them, you will take too much time trying to address them. As long as they can be serviced, the debts can be serviced, that's fine. Having said that, the servicing of debts is a bigger burden on emerging economies than mature economies. So one thing I would have expected the European Bank of Reconstruction and Development do is restructure these debts for emerging economies, perhaps over 100 years or 150 years, or write-offs. I think these countries, some of these countries deserve write-offs.
Yes.
And that has, and I wished in United Nations, instead of discussing so many other things, the write-off for emerging economies would have been discussed more than any other topic.